Welcome to Heather Ewing, the CRE Rundown. Today, I have a terrific guest for you. It is Karl Krauskopf. He is with Gold Multifamily. Karl, welcome.
Hey, how you doing? How you doing? Thanks for having me, Heather. It's super excited to be here, and yeah, I was excited to talk about some of our endurance athletes and sports that we do, and hopefully we get into that, and obviously on the CRE side.
I like it. It's the perfect combination, right?
Yep.
Yeah, exactly. So I've known you for, I think, what is it? It's a couple of years or so on LinkedIn. So
hmm
for those that may not have heard of you yet, can you share a little bit more about yourself?
Yeah, so I am a multifamily operator out in the Pacific Northwest, specifically located in Seattle, Washington, where people like to, not necessarily, it's not your first idea of where to start investing in multifamily, right? It's a little bit more difficult to manage a property simply because it's not the traditional landlord-friendly area. However, again, I'm somewhat of a contrarian thinker, and I do love working with and managing apartments out here. Spent a lot of time in the residential construction, new development, rehabs for the first portion of my career, and before that, I was in corporate strategy for about a decade.
Very nice. It's interesting how everything in our past kind of helps us on the path to our current rendition, isn't it?
Yeah, absolutely. It was spent a lot of time growing a book of business, and really focused on EBITDA improvements, so profit improvements, and a lot of that goes straight into multifamily. You know, how do you grow your tenant base? How do you retain your tenants? And how do you reduce expenses in the operations?
Definitely. And what got you into the investing world, right? You hear a lot about it. People either seem to really love stocks, some are real estate only, some understand, a balance of between the two. How did you get into all of this?
Sure. So I actually started trading, day trading, when I was a little bit disenchanted with my job at that point. Let's say this was about 7 years ago. Really started looking at some additional ways to make more income. And we were having a kid. My wife and I were going to have a kid, and again, we started looking at different options. Started day trading, wasn't really my thing. Didn't have the compute power at that point, and couldn't really make it work with the day job at the same time. Started looking at alternative investments, and stumbled into owning a duplex. Obviously, there was about 6 months worth of education prior to purchasing that duplex, and just fell in love with it. Fell in love with the rental, holding rental, and getting monthly income. Yes, of course, you still have to manage the property management company. Definitely not a passive investment by just buying a rental. Um,
Right.
I bought a couple of those, and then quickly realized we were running out of money and had to start flipping and gaining more capital. And this was back in 2019 when capital was free flowing and people were buying houses, and we flipped a ton of homes at that point.
Perfect. And now you're an endurance athlete. So, of course, that's near and dear to my heart. How did you get into that?
Oh, good question. So, have always been hiking. I've loved hiking. I say always. We moved out to Seattle about 7 years ago, a little more than seven, and we moved out here for the love of mountains. So I was always into hiking since we've been here. Have never really been the type of person who can walk up a mountain, so hike up a mountain and have a conversation. It would be at the top of the mountain that I'd be able to talk, or coming down the mountain that I would be able to talk. Meanwhile, I'm hiking with other people that can have those types of conversations, long-winded business conversations. I start hiking and running with, business partners and mentors essentially. And again, I can't talk while they're running. And so I've realized, hey, I got to get improved calisthenics, improve cardio. So about 18 months ago, decided, hey, I got to start running on my own. Wasn't working. Hired a coach, hired a running coach, and this was back in let's call it August of last year. And since then, it's been, ran my first 50K ultra marathon about 4 months later. Uh,
That's awesome.
and yeah, I've done three so far this year.
How would you say, in pushing yourself to that level, how has it affected you as an investor and also as a person?
Yeah, I think it's all about discipline and just realizing that you have to put in the motions. There are certain motions that you have to put in order to be successful, and it may not it's certainly not going to come overnight. With investing or with entrepreneurship, you know that you have to underwrite. Right now, I know that I have to underwrite roughly about 110 deals before, we're closing on a deal. And when you're at deal number three, it's like, okay, now I've got 107 left to go. It's going to take a while, but hey, we got to get that muscle done, or we got to get those reps in. So same thing with endurance athlete. I don't really want to wake up at 4 a.m. tomorrow, like we were talking about earlier. I don't want to spend
Right.
2 hours,
Right.
2 hours running in the dark. But I know that's the only way to be successful and not get an injury when it gets to running, what I call in-season running. And competition season.
So tying into that, and this is also why, with me marathoning, you doing your longer runs, is the equipment matters, right? And that's where we can easily liken that to commercial real estate and investing of the different tools and resources. What have you found works really well for those ultras? And comparatively, what do you find works really well in the investment world?
Yeah, so I think resources in the investment space is simply, I would say, it would be relationships, right? So brokers, whether it's from the debt side, the equity side, as well as obviously the deal side of things, and so making sure that I'm actively engaged in conversations with each one of those players that holds essentially the keys to the next deal. And so then, obviously there's other resources like, CoStar reports and things of that nature from a data perspective that certainly is absolutely helpful. Um, in terms of obviously running, one of the reasons why I love running as opposed to any of the other endurance sports is to me, it's one of the cheapest sports.
Mhm.
All I really technically need are a pair of shoes.
Right.
Most people would want me to have some shorts on, and more people would want me to have a shirt on. But I can do it with just shoes.
Right.
Yep.
I love it. That's great. Well, and I think also it's the simplicity of it, which is what you're saying. And that's why I like too when we're traveling, whether it's
Yep.
different business events, networking, things of that nature, that you just grab your tennis shoes and you can go from anywhere, which is really nice.
Yeah.
So,
Yeah, and I think the simplicity goes back to, I think investing in real estate is one of the most simple things, but it's also the most difficult thing.
mhm,
And in the fact that it takes discipline, right?
definitely.
Same with endurance running, same with investing. It's simple. We know what the steps are to do and how to be successful. It's just actually putting in the reps.
Right. And I think also another big point is seeing the big picture and breaking it down
Yep.
and staying with it consistently, which, as you know, with investing, you can put a great plan together, but there's always going to be some type of surprises that come along. So it's that endurance, long-term mindset, and the relationships, as you earlier pointed to, that really bring things across the finish line. So with that, mindset, how does that tie in? Where do you see the gaps and where do you see our places that people can really execute due to mindset?
Yeah. Good question. So, where I think too many people rely on motivation to getting them up in the morning, to getting them and helping them find either their next deal, whether it's real estate or whether it's, whatever it happens to be. Too many people rely just purely on motivation. Again, I'm a strong believer of set out your goals. What is your end result that you want to be at? It doesn't have to be the 10-year result. It can be the 1 year result. What is your 1 year where you want to be in 1 year, and then work backwards and figure out what are those steps. And then again, just reminding ourselves of what that 1 year goal is and how then, if you're far along enough in your whether investing journey, business journey, you can start extrapolating that 1 to 3 to 5 year goal, and then even a 10-year goal. And some people go beyond that, and that's where inspiration, motivation starts kicking in. And not to downplay motivation and inspiration at all. That's what connects the discipline to the emotional side of things. And so I'm a huge advocate of motivation and staying motivated. But again,
Right.
finding those things, those steps that you need to be in order to stay disciplined, coming in and day out.
Well, and I'm sure you hear it all the time too, because you're very consistent. You've been doing this for years, similar to myself, of Well, it's easy for you, Carl, right? Where people have a premise that just because you're consistent and you deliver for yourself and also in your races, that it's something that you love doing every day. And to your point, it's not. Where we love being motivated and we're frequently motivated, inspired, but some days it's the last thing you want
Mhm.
to do. Kind of like you getting up at 4 a.m.
Yep.
tomorrow.
Yep. And it'll
Yeah.
probably rain tomorrow as well. So that's raining
Right.
and 39 degrees sounds fun.
Yep. Yeah, and I'm sure we're wired the same way in the sense that it's who you become because of your diligence in
Yep.
doing that, the dedication to the sport, the dedication to your clients, investors, that it's very fulfilling. And I think that's why it creates such a positive loop that
Yep.
continues forward for years and decades.
Yeah, certainly positive feedback loop.
Definitely. So, what would you say is something that you envision for the future with investing and all of those different assets of commercial real estate, right? We continue to evolve and expand. Obviously, 2020 was a big year several years ago. We're in a completely different arena in some
Mhm.
ways, but yet not. What are you envisioning for the industry?
Yeah, good question. So, from an industry perspective, and then maybe a corporate perspective, obviously from the industry, I think we'll continue to see what I would say a sideways market. I don't think we're going to see but what I hope that we don't see is any kind of massive downturns. And I would define massive downturns as huge spikes in unemployment, and then all of a sudden we need to start bringing down the rates radically too quick. I think that that's going to be more or less a doom loop. I think if we're talking about, more globally, talking about national debt, I think that is a big crisis that we need to solve. And certainly is going to weigh on a lot of our metrics, 10-year treasury, 5-year treasury, et cetera. And so again, my anticipation of what we're going to see between now and the end of 2025 is just a continued sideways market. Um, and if you're in a position to buy, I don't think this is at all a bad time. I think this is a great time to start buying, which we are doing ourselves in the Northwest, and
That's
it's all
great.
about finding the best cost basis on these deals and making sure that you're not going into an oversaturated inventory market is what
Mhm.
we're looking at. And that kind of plays into the corporate landscape as well. If we're continuing to find secondary, tertiary markets that aren't oversaturated in terms of supply, that have good, strong fundamentals in terms of population and job growth, wage growth as well, and places that people want to live and want to recreate.
Like, how do you see the interplay of AI affecting this?
Yeah, I absolutely love
A
it.
great question, right?
Yeah, no, absolutely. There's just too many ways that AI can impact all aspects of CRE. From every single turning point, underwriting. We're starting to see more and more startups that can help generate underwritten files for in both investors as well as debt, as well as lenders, as well as equity shops. And so you'll see it from there all the way to it was working with a window cleaning company that is now employing AI-based drones to clean windows on let's call it five stories and above, where it would be unsafe to bring somebody in, or rather it would be expensive to have somebody come in and do it via drop downs. And so again, I see every aspect of it impacting the market. It's just where the focus is, and making sure that we don't get the shiny object syndrome.
Right, exactly. All right, here's a good one for you. If you were to reflect on the past 5 to 10 years, what is something that you would have advised yourself to make things easier?
Yeah, I would have bought a duplex sooner or a small multifamily sooner. My wife talked about buying a duplex probably about 12 years ago. And I
Mhm.
was like, was vehemently against the idea because I didn't want to share a wall with somebody. And I wanted my own yard, my own space. Um, and now it's like, well, we should have done that 12 years ago. We bought a remodel, home to remodel initially, and then we lived in a bunch of single family homes and live in flips. but I would have loved to have started that rental income sooner. Um,
Yeah.
but that's part of the learning process, and I'm teaching start a teaching gig um, for high school kids next year in January.
Oh, that's terrific.
Yeah, teaching them
Tell us more about that.
basics of real estate investing is the course topic, and yeah, really excited about that.
Are you going to extend that to a basic offering? I mean, that would be ideal for people that are new to investing in general at any age.
I certainly wouldn't. So it could be a consideration. I wouldn't. I'm not looking at it in terms of offering like a coursework and classwork and coaching and accountability programs. Not something that I would look to get into. But certainly, I always offer our investors, hey, I'm happy to help work with somebody to get their next loan, their next purchase. So we do that. I do that right now for our active investors, but wouldn't be looking to expand it or commercialize it rather.
Right, right. Okay, here's the final hard-hitting question. All right. So, what does living fully mean to you, Carl?
I think living fully means the ability to spend time and with the people that we want to spend time with in the way that we want to. So, to me, what that would look like in a picture perfect world is spending the most amount of time with my family, my daughter, and again, being in places that we want to be. I would say largely we do that. Obviously now we're in the confines of school and my wife's work environment, so we do have some bounds on that. And so yeah, I mean, I think it's mostly just spending time and being with family.
Yeah, definitely. It's really that simple, right?
Yep.
Yeah. All right. So, where can people find you, Carl, if you can share that?
Sure. Two places I'd love to post. I post daily on LinkedIn. Just educational topics, lessons learned that I've had going from single family homes to owning will be a little over 100 units in February, and I post there daily. And then secondarily would be gold-mf.com. So Gold Multifamily is our company, and our website is gold-mf.com.
Perfect. Well, Carl, thank you so much for joining me today. And I look forward to next time.
Thanks, Heather.
You bet.